begin with the big story we're tracking this hour, and that's related to SEBI unveiling plans to introduce a new asset class that is aimed at high-risk-taking investors, and that could potentially bridge the gap between mutual funds and portfolio management services. But what else is there as far as this plan is concerned? Let's go across to my colleague Ankur Mishra, who's joining in with more details. Ankur, so tell us, what is this really aimed at, and what is the eligibility criteria for this new scheme?
Yes, in a bid to deter the investors from going after the unregistered portfolio management services, SEBI has now proposed that mutual funds can have funds like long-short funds. What it means, it has proposed to create a new asset class for investors, and this asset class will have flexibility in terms of regulation from SEBI. Now this asset class will have flexibility to invest in derivative products. Remember, currently mutual funds are only allowed to invest in derivatives if it is a hedging kind of strategy. Otherwise that asset class is not permitted, and now SEBI has proposed that derivatives may be allowed for the purpose of taking exposure by mutual funds. Now what happens for investors? There is a proposal that minimum investment size of rupees 10 lakh should be there for the investors, and this in turn will prevent the retail investors from going for this high risk asset category. However, it will bridge the gap between mutual funds as well as portfolio management services, and more so for the people who were going for unregistered kind of PMS.
All right, thank you very much, Ankur, for getting us all of those details pertaining to these new plans of SEBI. And in fact, it is planning to introduce a new asset class that is aimed, like my colleague Ankur was stating, at high-risk-taking investors. But what's more to it as far as this plan is concerned? Let's discuss that further with PV Subramanyam, who's the CEO of Subramanyam. Thank you very much, Mr. Subramanyam, for joining us and helping us understand this further. So let me ask you at the outset to help us understand how this new asset class that is being planned for rollout by SEBI is going to be different from the market options that currently exist as of now, and how big is this investment opportunity?
Oh, I think it's a fantastic move by SEBI, because SEBI has acknowledged that people with 10-15 lakhs are finding 50 lakhs as a very big threshold to cross to enter PMS. So yes, what SEBI says is right. Many people were trying to run their own 10 lakhs, 15 lakhs unregistered PMS, where you ran the risk that if something went wrong with the broker, you lost all your money. Now at least the whole thing will be registered. So I think it's a fantastic move. You will be allowed to do things like long short. For example, a part of the money could be kept as a deposit, and you would be allowed to short the share, which means sell a share which you do not have. Such things are not allowed in the mutual fund. Very clearly, you can take a derivative position, but fairly obvious, you cannot use the whole thing as a leverage. What I mean is, you cannot take the 10 lakhs and take a 50 lakh derivative position. All your derivative position, equity position together should only be 10 lakhs. You cannot leverage, and that's fair enough. In India, leveraging is not allowed. So that is a good thing. For the smaller PMS managers, if they are allowed into this, it is going to be very good, because even if, let's say, the head of the family has 50 lakhs to put in a PMS, he may be willing to put 10 lakhs for each of his kids or 10 lakhs for his wife, and thus create a bigger PMS portfolio. Also, they will allow your SIP into this. So here you put 10 lakhs in the name of a kid and start putting 50,000 every month and create a bigger and bigger portfolio to be used for the kids' education. Can you create such a product even without a scheme like this? Maybe very difficult, but today it is going to be very easy for small PMS manager or whatever this product is going to be called to be able to create such things. And even if somebody comes with 20, 25 lakhs, 30 lakhs, and then slowly increases it to 40, 45 lakhs and 50 lakhs, then he can graduate him or her to the bigger PMS. I think it's a fantastic move. It really kills all the illegal the PMSs which were running, which were a high risk thing. So the risk is reduced. And there's a big class of people, young professionals, 30, 32 years of age, earning about 25, 30 lakhs. They can also come into it. I think it's a superb move.
Right. Right, right. Right, sir, you mentioned about the minimum ticket size. So let me expand more on that question. If you could also delve a bit deeper into why this minimum investment size has been set at 10 lakh rupees. What do you think is going to have an impact? Well, how do you think it's going to have an impact on the overall investments, and what does it really mean for investor sentiment?
See, what happens today is everybody becomes an investor by putting even 500 rupees. So you don't want somebody with 2,000 rupees and 20,000 rupees to come into a higher risk product. This is a slightly higher risk product because you're allowed to take what is called naked derivatives. You're not just taking it for hedging, but you're taking a fresh position in this. So it is for the slightly higher, I wouldn't call HNI, but yeah, maybe HNI plus customer to come into this. Now, suppose you win, let's say you have a crore of rupees to invest. 50 lakhs is too much to put in a PMS. Then I would say, no, don't put 50 lakhs because you have only 1 crore. So the PMS threshold may be 50 lakhs, but it was largely attracting the guy or woman with at least 5 crores because you didn't want to put too much into one scheme. Now with 10 lakhs, it means even somebody with 1 crore can go and put 10 lakhs in a PMS and see how that person is performing. Within this 10 lakhs, you can have some equity, you can have some derivatives, you can have some mutual funds together, right? That whole package has to be 10 lakhs. And you can keep adding maybe 50,000, 1 lakh every month. So I think it's a fantastic
so the idea
place.
Basically is to get quality investors and at the same time give a push to premium investors. Sir, I also want to understand from you on the kind of impact that it will have on businesses of mutual funds. Do you think AMCs will be interested in bringing in these products? And if so, what is the demand that you predict?
Actually, more than the AMCs. Of course, AMCs will be interested in selling this because when a person goes and sells to one person, he's asking for a bigger check. Otherwise, he goes and asks for a 10,000 rupee SIP or a 50,000 rupee SIP. So it is attractive for the distributor to market this. Second, some people can, of course, come direct, and it will be very attractive for the small PMS person. A PMS person with 50 crores or 1 crore or 100 crore kind of a AUM, for him or her, it will be attractive to sell such products to their own clients. A client who has got 50 lakhs of PMS, like I said, it could include other family members at 10, 20 lakhs also. So yes, the size of the market increases. And like I said, you can do long short, you can do, you can take derivative positions. You can, I mean, imagine if you put
so various options available. Let me also ask you about the regulatory measures, sir, that will be needed in place to ensure the safety of investments in this new asset class.
It won't change much. It will just be a cut paste of whatever is applicable to the PMS. They will just make it applicable here. I don't think there'll be too much leeway into this. So in a PMS, whatever you can do, you will be allowed to do in this. Right now, it is a consultative paper. I don't think they will go down much in terms of regulation. They wouldn't want to increase the risk like that. So I guess the same rules and regulations which is applicable to PMS will be applicable here. So that's better. And like I said, you're allowed to do SIP in this, which means the size of the market can increase. You're allowed to put in an index fund. You're allowed to take a derivative position. I think all these things are very good. There is a market, the HNI market, so slightly under the HNI market will be interested in this. And yes, I think the whole, everybody will be excited. Whether smaller AMCs may be interested in this, the bigger AMCs may not be interested.
Volumes about the fact that India is finally opening up to different investment products, styles, and in fact approaches. So there you have the passive factor, inverse ETFs, alts, and even more. And there is no single way to invest. That speaks volumes about the kind of market opportunity that lies at present in India.
Right, absolutely. And somebody is tapping it, very sensible to keep the limit at 10 lakhs and not at 25 lakhs or something like that. So you can grow a investor from 10 to 40, 45 and then to the other PMS, right? So that way, it's a good route to get a person started at 10, slowly increasing it over 3-4 years. The market will also do well, and he does a layer, say a 1 lakh rupee SIP. Over 3 years, he'll move into a 50 lakh regular PMS. It's easy for him to come in through this route like this instead of directly trying to put 50 lakhs in the PMS. It's a very good route.
Okay, sir. On that note, thank you very much for sharing your thoughts this evening with us on rush hour. Indeed, like you said, it's a good route to get a person started at 10 lakh rupees, and then from their point on, he or she can increase that even further. On that note, thank you very much, sir, once again for joining us. And viewers,
if you like this video, then like, share and subscribe to ET Now.